Hi everyone, and welcome to our webinar series of All You Need to Know in 15 Minutes. Today we will be focusing on the ELTIF, and that is a product which is really weighted by practitioners. For today's webinar, I will be joined by my partner Benjamin Bada, and I will be as well leading it myself, Aurélien Hollard, heading the investment funds practice at CMS Luxembourg. For today's webinar, we will focus on the key information you need to know when thinking about the ELTIF and why it should be relevant for you. So we will be focusing on really key elements like eligible assets, investment rules, liquidity and redemptions, marketing to retail investors, transparency requirements, and of course, when the new regulation is entering into force, is being of application, and any grandfathering provisions before finally discussing some key challenges and opportunities for the fund industry. But before diving into those topics, typically of the ELTIF, I think it's really important to know that the ELTIF is a key tool within the recent trend on retailization of the alternative funds. And of course, everyone is talking about that democratization, retailization of the alternative asset class. We, of course, all know that under the UCITS regime, it is possible to onboard retail investors, but the investment universe of UCITS is fairly restricted to listed securities and does not allow the possibility for retail investors to get exposure to alternative assets and alternative funds. The way the IFMD is being structured, it allows for the possibility for alternative investment fund to be marketed within the European Union to professional investors only. So of course, retail investors are not part of that marketing passport. However, and that's part of the toolbox we have to attract non-professional. Certain countries did extend the benefit of the marketing passport to non-professional investors, which then facilitate the distribution to this category of investors. We think of Denmark, Germany, for instance. There are as well discussions about broadening the definition of professional investor to make it autonomous from the MiFID regulation, and basically to state that it will be any professional investors investing at least 100K, but we are not that far yet. So waiting for this possibility, then we also have for certain countries the possibility to rely on national private placement rules under the AFMD, that famous Article 43, and as well we have some specific provisions under the prospectus regulation, which can apply for investment funds products to a certain extent, notably in the context of listing of securities. However, none of these tools are 100% satisfactory for a pan-European distribution to non-professional investors. And that's why the ELTIF is likely to be the tool of the next month and years to open the alternative asset class to retail and non-professional investors. So what's the ELTIF? The ELTIF is the European Long-Term Investment Funds. It's all but new because it exists already since 8 years in the European Union. A fair portion of ELTIFs are being established in Luxembourg. So Luxembourg is already a strong financial place for ELTIF. It's a label which comes on top of the basic and regular product that you are using. So basically, if you are willing to set up a CIF, SICA, or RIFE, then you can have that product apply for the ELTIF label on top of it. Of course, if you are deciding for a CIF, SICA, or RIFE, you are limited to well-informed investors. So even if the ELTIF would allow you to have a broader investor base, you need still to comply with the restrictions of the product law. If then you intend to raise funds from retail investors, the Part 2 fund, Part 2 UCI, is usually the way to go. And there are discussions around the possibility to use non-regulated SCS or SCSP as the possibility to raise funds as well from retail investors under the ELTIF label, but there are as well certain constraints because, of course, there are specific guidance from the regulator, notably the CSSF, restricting to a certain extent distribution to non-professional for those non-regulated funds. It is also important to note that the ELTIF can be only at a compartment level. So if you have an umbrella fund, you may go for umbrella fund for compartment one with a non-ELTIF product, like SIF, for instance. And then when you are or part two, and then for the second compartment, decide to elect for the ELTIF regime. Then to keep in mind as well is that it's a two-layer regulatory approval process. So it's not only at the product level, at the fund level, that it needs to be authorized as an ELTIF, but also the manager needs to be authorized as an ELTIF manager. So usually this is something that you carry out during the process of your first ELTIF, and is not longer than the labeling of the product itself, but it's still something to keep in mind because you will need to update certain procedures at the level of the manager. So that's it for the brief introduction, and then we'll now dive into the specificities of the ELTIF, starting with eligible assets. So I hand over to you, Benjamin.
Thank you, Aurélien. So an ELTIF is subject to investment restrictions in terms of eligibility of assets and investment rules. To come back on the principle is that the core principle is that an ELTIF should make long-term investments that benefit the European Union's real economy. This means that investment strategies such as private equity or infrastructure should be, for instance, suitable as a long-term element is inherent to such strategies. The ELTIF must invest at least 55% of its assets into eligible assets. Eligible assets comprise equity and debt of private and listed businesses, green bonds, real assets such as infrastructure assets, simple securitizations, as well as indirect investments via funds. The regulation provides some limitations on eligible assets, such as an investment may be made into any listed business, provided that the maximum capitalization threshold of 1.5 billion euro is complied with, but also that investments into financial undertakings are permitted as long as such entities have been authorized for less than 5 years at the time of the investment. The rationale being to support fintechs, but not well-established banks or asset managers. There are no prescriptive rules on the types and sectors of investments, except that no investments may be speculative, for instance, investments in jewelry, art, wine, and that the ELTIF may not invest into businesses that are based in countries which are, at the time of investment, either on the EU tax blacklist, the EU AML high risk list, or the EU sanctions list. Some types of investments are also excluded, such as short selling, securities, lending, derivatives, except for hedging and commodity exposures. On the next slide, there are no geographic requirements, which means that an ELTIF may invest into non-EU projects, as the regulation recognizes that non-EU investments may also ultimately benefit the EU real economy. For ELTIFs marketed to retail investors, diversification and concentration rules must be complied with. In a sense, the diversification rules provide that an ELTIF may not invest more than 20% of its capital into any single undertaking, fund, or real asset, or to securitization vehicle, or may not invest more than 10% of its capital into UCITS eligible assets issued by a single body. The concentration rules provide that the ELTIF may not acquire more than 30% of the shares or units of a single ELTIF, an EU AIF managed by an EU AFM or UCITS. It should be noted that such diversification and concentration rules do not apply to ELTIFs that are targeted to professional investors only. An ELTIF may have a fund of funds strategy, provided that the target funds into which the ELTIF invests will in turn invest in eligible investments for ELTIF, and they will not themselves invest more than 10% of their assets in collective investment undertakings. This means that such target funds must have essentially investment strategies that are in line with ELTIF objectives, and such target funds must quasi-exclusively make only direct investments. Master feeder structures are also acceptable, which means that an ELTIF may invest 85% or more of its capital into another ELTIF. Now let's say a few words on liquidity and redemptions. ELTIFs are by default expected to be structured as closed-ended funds in light of the long-term investment strategy inherent to such vehicles. However, the regulation provides the possibility to structure ELTIF as open-ended funds with redemption rights granted to investors during the life of the ELTIF to a certain extent in order to better match expectations and liquidity needs of retail investors. In that context, certain requirements must be complied with, such as a minimum holding period, the use of liquidity management tools, and fair treatment of investors to satisfy redemption requests. The details of such conditions will, however, be determined in a second step by ESMA. In respect to secondary trading, that should be also permitted if the ELTIF manager has implemented a policy for matching new potential investors and exit requests. On borrowing by ELTIF is also permitted, provided that the ELTIF does not borrow cash representing more than 50% if marketed to retail investors or 100% if marketed to professional investors only of its NAV. Now we can move to the next slide on the marketing to retail investors.
Yeah, sure. So indeed, the key specificity of the ELTIF is to be able to be distributed to retail investors, but there are still some few requirements, though a lot less than in the past. There is a suitability test which has to be made by the fund manager in case of direct distribution or by the distributors. This suitability test is in line with MiFID II, which then simplify as well the way the market can apprehend that test. Basically, if the outcome of that test is negative, a retail investor may still invest in the ELTIF, but then there will be a requirement for an explicit consent from that retail investor. And there must be a written notice in case of really long-term and illiquid commitment of retail investors in the case of an ELTIF having a lifespan of 10 years. Of course, SFDR requirements are important in that context. They are part of the assessment of the product asked by the retail investors, and they should be expected to be taken into consideration. And we can easily anticipate that Article 8 or 9 ELTIF will have a strong advantage from a commercial perspective when targeting retail investors. Good news are that there is no longer any minimum financial portfolio or minimum investment amount required from a retail investors into an ELTIF, meaning that even a non-specifically wealthy retail investor would be able to invest a small amount in the ELTIF. Of course, this is for ELTIF eligible for that type of investors. And another key element, which is an additional flexibility, that there is no requirement for local facilities in the respective member state where the ELTIF intends to target retail investors, which was quite cumbersome for asset managers not being familiar with UCITS-like distribution requirement and without any specific local facility in those countries. So that is really expected to simplify the distribution to retail investors throughout Europe. Then we can move on transparency and requirements, Benjamin.
On the transparency requirements, so there is information to disclose to investors, which include the information set out under Article 23 of the AFMD. There's also the need to have a prospectus, which is clearly stating whether the ELTIF may be marketed to retail investors or not, and an annual report in accordance with the AFMD. The SFDR and taxonomy disclosures should also be complied with, and additional requirements may apply depending on the relevant product laws applicable at hand. For instance, if the ELTIF takes the form of a SICAR or a Part 2 fund. If the ELTIF is marketed to retail investors, a KID must also be provided. So in a nutshell, additional information on top of the AFMD disclosures relate to the long-term nature of the ELTIF, its liquidity features, and its costs. We can also note that the prospectus of a feeder ELTIF must contain specific additional information, including, for instance, information on the master ELTIF.
So when it comes to the entry into force of the ELTIF, so the ELTIF is already entered into force beginning of this month. However, its application has been delayed in time, and it will only be applicable as from early next year, so 10 January 2024. However, of course, if you intend to launch an ELTIF under the new version of the ELTIF regulation, there is usually, depending on the type of product, but with the process with the CSSF, there is usually during the product design phase and the authorization process around 4 to 6 months to have that type of product being launched and approved. So we are more or less on time for any players willing to launch that ELTIF when its application will be made early next year. And for current ELTIF, there is a grandfathering period of 5 years. So it's important to note, but even more importantly, I think for players with existing ELTIFs, there is the possibility to make an opt-in and to already benefit from the flexibility offered by the new regulation. So if you already have an ELTIF in place and you may still raise funds, then you can already benefit from the new rules. So I think that's quite important to note. Then we move on to some challenges and opportunities for the fund industry. As we discussed before, there is a current trend on retailization, democratization of the alternative asset class. And clearly the ELTIF is seen as the missing tool to facilitate pan-European distribution of alternative investment funds to retail investors. So there is a high expectancy that this product will be a true bestseller. And some would say maybe similar to how UCITS were at the time. So it could become a kind of a UCITS bis between the typical EIF, which are mostly distributed to professional investors, and the UCITS, which are restricted only to listed assets. So there is really an expectation that this product is the key product for the next years. On taxation, it's likely that there will be some exemption from the subscription tax. So this is to be confirmed, but that could also be welcomed by practitioners.
A few items on the opportunities and challenges. In relation to technical challenges and operational challenges, investor servicing, there will be the need to look at the IT system of service providers in light of the high amount of investors that could actually potentially be onboarded to ELTIF in light of processes and systems that are usually used for the onboarding of investors in the context of illiquid funds or alternative investment funds to be transposed to that type of fund where the capital raising could target much more investors and retail investors. So that's probably a point of attention and of evolution to be made in terms of technical challenges that could be faced. And on the distribution network, in the same trend, there will be a higher amount of investors to be reached, to be onboarded, with a distribution network to be put in place, and also with the question about the entities that will be able to carry out the suitability assessments that Aurélien spoke about earlier. And in that context of the suitability assessments to be made, investors will be asked whether they would like to do more green investments, and therefore ELTIF will need probably to be greener funds in order to match suitability requirements from investors requesting green investments, which is also an opportunity, of course.
Thank you for participating to the webinar. This is the first one of a webinar series, which will be held in various local languages. About the Italian session in Italian, about the specificity of the Italian market regarding the ELTIF in cooperation with our local office. Same for the Spanish session. So we'll have a session in German similarly, and in French as well with CMS Francis Lefebvre about the specificity of the French market with respect to the ELTIF. So if you are interested in those dedicated markets, please do join those sessions. They will be very informative on local specificities. Thanks again for attending the webinar, and we wish you a nice day. Thank you very much.
Thank you. Good day.